Welcome to Shivkumar classes. Today the topic which I am covering is chapter 5, Dissolution of your partnership firm for second PUC students, class 12. The very first one is, what is the meaning of dissolution of a firm? The very simple meaning it is completely closing down of the business. That is, the partnership firm is entirely full it is closed. What is the reason? The reason for dissolution. Plenty of reasons will be there. Let us take few examples. Maybe because of old age, sickness, misunderstanding, completing of the business, or any other reason. Yes. And another meaning it is meaning of dissolution of your partnership. The very first one discussed it is meaning of dissolution of your firm. Firm means the business is entirely closed. And here it is dissolution of partnership. It means that business is not closed, only the partners are going out. See the meaning? Only the partners are going out, but the business is not closed. But the accounting procedure in this chapter we are going to do on the basis of firm. Next, accounts to be prepared. What are the accounts to be prepared? Realization account, all partners capital account, either cash or bank account. In a balance sheet, if the cash account is given, we will continue with the cash account. In case if the bank account is provided in balance sheet, we will continue with the bank account. That's it. Okay. What is the meaning of realization account? It is an account which is prepared to find either profit or loss on sale of assets and payment of liabilities. That is, what is this dissolution? A firm will be entirely closed. Once it is closed, the settlement to be made to the liabilities, the settlements to be made to the partner's loan, and the settlements to be made to the partner's capital. For the settlement of all these three, we required cash. How we will manage the cash? We will try to sell our assets. So the simple logic is sell all the assets and pay all the liabilities. That procedures we will show it is into this chapter. That account only it is the realization account. Let me show that how the entries will appear into the realization account. Take an example of debit and credit in the realization account. Particulars, inner column and outer column rupees. Again particulars, inner column and outer column rupees. Now this realization account is the heart of the account. Once if you prepare this realization account detailedly, very easily, then the remaining account we can prepare that. Yes. From the question, what it is provided, in debit side you should bring the all realizable assets. For example, I'll show you one question. In that question, you will come to know that what entries we have to record it. Yes. Now you see in asset side, cash at bank, sundry debtors, machinery, stock, land and building and furniture. Out of 1, 2, 3, 4, 5, 6 assets, except cash at bank and all other assets which is given here, it is the realizable assets which is appearing into the asset side of the balance sheet will appear in the debit side of the realization account. Now you see 1, 2, 3, 4, 5 assets. Yes, debit side. Just a minute. Yes, 2 assets. What are the assets will appear? Sundry debtors, machinery, stock, land and building and furniture with 12,000, 47,000, 42,000, 60,000 and 25,000. All this will appear into debit side as the first. Coming to second one, since the asset is appear into debit side and in credit side we should record by liabilities. That is all outsiders liabilities. For example, you can see it is into this problem. This creditors and loan, these two things are it is the outsiders liabilities as per this problem. If it is in some other problem means the example of outsider liabilities is creditors bills payable, bank overdraft, bank loan, and any other person's loan except partner's loan, except partner's loan. All these are outsiders liabilities. All these outsiders liabilities, you should show it is into the credit side of the realization account. So first is over, second step is over. Then step number 3, you write it into the credit side, either cash or bank account. What for this? This is for sale of assets. If all the assets which is appearing into debit side, all that asset will be sold, that will be given in the adjustment. Yes, that will be given in the adjustment. That values we will record it into inner column, and that total we will bring it into the outer column, that is total sales. And sometimes some assets will not be sold, that is taken over by the partners. For example, Mr. X is taken over furniture, means that Mr. X capital, it should be transferred. For example, 10,000 worth of furniture is taken over. So when it is sold for cash, it will appear into the cash account in the third stage. Since it is not sold, that will be transferred to the partner capital account. So after this third stage, sale of assets, all the liabilities what we have, that we have to pay it back, that will appear into debit side. Again, to cash or bank account. So normally, apart from this problem, generally what are the entries will appear? Liabilities, creditors, bills payable, bank overdraft, bank loan, and any others loan. All this will appear into debit side of the realization account. Even here also, if some of the liabilities is not paid, that may be taken over by some of the partners, then it will be transferred to partners capital account. For example, Mr. Y has taken over the one of the liabilities, for example creditors, then creditors will not appear here, then it will be transferred to Y's capital account. Yes, all the total will appear into outer column, and one more entry into debit side will appear to cash or bank account. What for? This is to record the realization account expenses. That realization expenses will be recorded here. Yes, now once again I'll repeat what are the explanation I given. In short, I'll show it. You see that debit side to assets from balance sheet, credit side by liabilities from balance sheet, that is outsiders liabilities. And once again in credit side, cash or bank account. What for? Sale of assets. And partners capital account, concerned partners capital account. What is that concerned partners capital account? Assets taken over. Assets taken over. So coming to debit side, to cash or bank account. What for? Liabilities paid. And concerned partners capital account. What for? May be taken over the liabilities. All these are option. And next one is once again cash or bank account. What for? Realization expenses. After completing of all this process, the answer will be into the either in debit side or credit side. Credit side total is more and debit side total is less. The balancing figure what we get is called as profit. In case credit is more and debit is less, in case debit is more and credit is less, the balancing figure we call it as the loss. That loss transfer to partners capital account or profit transfer to partners capital account. That's it about the realization account. Next we need to discuss about all partners capital account. Yes, here I am showing the partners capital account with only two partners, X and Y, X and Y. Particulars. In credit side, you see the very first one is normally in partners capital account by balance brought down. The second entry is by general reserve or reserve fund. that should be distributed to partners as per their profit sharing ratio. Third one is by profit and loss account. If it is given in the liability side, will appear into credit side. In case if it is given into asset side of the balance sheet, that profit and loss account will appear into debit side of the partner's capital account. Okay. So these three entries will appear from the balance sheet. Profit and loss may appear either in credit side or in debit side. Now, apart from that, one more entry we will record it here. It is the realization profit, realization account. In that we will record profit. In case profit, that will appear in credit side. In case if it is loss, that will be recorded into debit side to realization account. Yes, and apart from these, one more realization will appear. That realization is assets taken over, sorry, credit side means that liabilities taken over. The same realization will appear, the same realization account will appear. What for? The assets taken over by the partners, which has been shown in the realization account. Mr. X capital furniture taken over, Mr. Y capital creditors taken over. There from debit side, it will be recorded into credit side. This is from credit side, that will be recorded into debit side. After finalizing of all this total, debit side we will get the balance, that can be called as the bank account or cash account. That will be the final settlement to the partners. That is the balancing figure. That's it about the capital account. Last, coming to cash or bank account. Cash or bank account. Debit side, credit side. In debit side we should write to balance brought down, triple X. That is from the asset side. What balance it is? Cash balance or the bank balance should appear. And next one is the to realization account. What is this realization account? Is that in realization account we have sold the assets. Under the stage number 3 we can see that sale of the asset. Now we can see this one. By cash or bank accounts, stage 3, sale of asset, that will be given in adjustment. All this total what you get in credit side, that will appear into the debit side of the cash account. That's it about debit side. Credit side, 1 2 3 4 5 entries you should remember. Very first one is the realization account. What it is? Liabilities paid. Second one is once again realization account, that is expenses paid. Both these two will appear into the debit side of the realization account. Now we can see that to cash account, this total. Once again cash or bank account realization expenses, this total. So this cash account and this cash account from the realization account will appear into the cash account. Yes, over. Then what is the third one? Third one is should be partners loan account. Partners loan account. In case any loan is given, that will appear into the liability side of the balance sheet. That is the third entry. And fourth and fifth, it is the partners capital. Partners capital X and Y. In case that is the sixth one is. That's it. The idea relating behind this preparation of dissolution of the partners. Now let me work it out one problem. That problem link will be provided. It is into the description.